I have found 8 ways to invest money in Ireland tax efficiently. Basically, these 8 investments are tax efficient investments. Welcome back to my channel, All About Ireland. This is Ella, your friendly advisor in Ireland. In this video, primarily I'm going to talk about few investments that you can make and you can still save tax as well as, pay less tax on the proceeds. Without further ado, let's just dive in. Before I go ahead, there's one small thing that I want to tell you. I provide tax filing services. If you need those services, you can email me at allaboutireland247@gmail.com. I'll include the details in the video description. Do take a look at it. So let's just dive in. The first thing is the pensions. I keep talking about pensions in all of my videos. This is the best and easiest way you can save tax. For every 1,000 euros you invest, based on the tax slab you're in, you either pay 400 euros less or 200 euros less tax. And this investment can be put into any of the pension funds, which will track any index fund or even emerging market funds, and you get money, the growth on the fund over, and the earliest retirement age for any of these funds is 50. So this money will keep making money for you. Even if you screw everything in your life, you will have your pension fund when you are old to enjoy your life. This is the best. Few rules. If you see the table there, if you're under 30, you can invest till 15% of your gross salary. 30 to 39, 20%, 40 to 49, 25%. As you get older, you have this opportunity to invest more into pensions, and basically you can save more on the taxes too. But the only caveat there is you can only these percentages are only applied on a max salary of 115k. Let's say you have 200k as salary. You're not allowed to invest 20% of 200k. You're allowed to invest only 20% of 1150. You can invest more than that, but you only get tax benefit till 20% of 115k. So keep that in mind. But otherwise, it's the best and easiest. You can pay through your company monthly into your occupational pension fund, and you need not even consider that as investment, because again, even your company pays into that fund. They do contribute a percentage, so that keeps on growing. Imagine if you put even 100,000 or 100 euros in a bank account with 10% growth. After 30 years, that 100 will be close to 10,000. So yeah, this is like a monthly SIP, systematic investment plan. So yeah, I would suggest you to put money into it. And again, before I go ahead, there are 3 pension types, fund types: active, passive, lifestyling. Active is where you actually choose what you want to have on the investment fund. Passive is where someone else decides for you. Lifestyling is where, again, someone else decides for you, but as you age, you invest in low risk. As a young person, you invest in high risk. The advisor takes care of that. So those are called lifestyling investment funds. I do kind of active passive, but again, I put all my money into 100% equity because we are still young. The next thing is tax relief on shares. There are 2 schemes which government of Ireland runs, and any company in Ireland can sign up for those. One is approved profit sharing scheme. The other one is SCI, save as you earn. Right? Whatever you invest into this, if you buy these shares, you can get tax relief on that over pensions. So let's say if you're maxing out on pensions, you can also max out on the share buying. If you're working at any of the big companies and you're buying these shares as part of these schemes, the shares are only, there to grow, right? Here, instead of a pension fund, which is a mix of many stocks or bonds or other asset classes, here you'll have only shares of the company you're working at. But again, as part of approved profit sharing scheme, you are only allowed to invest maximum of 12,700 a year, whereas the SAE, you can invest a minimum of 144 or a maximum of 6,000 euros. And again, you'll need to file Form 11 for this. Anything you do on the stocks, you need to file Form 11, not Form 12. So that's the second one there. The third one is EII Tax Relief Scheme. The few companies which are approved by the Government of Ireland as part of EII. I think it's Employee Investment Incentive. The maximum investment that is allowed is 500K. If you are investing for a minimum of 7 years, I mean, you won't take any money back. And then if you are planning to invest only for 4 years, a maximum of 250K is allowed. I know 250K, 500K is huge money. That money you can purchase house and rent it out. That's another passive income there. But again, you pay tax on the rental income. You don't pay any tax on this. You get tax relief. Let's say your salary is 300K in the year, and you invest 250K, into EII. You basically save 40% of 250K, right? You don't pay that money to the government, and whatever money you are supposed to pay the government, it will be invested in the firm, and the firm grows, the investment grows. It can multiply like crazy, like the other multiplier shares. But again, your company the company you're investing should be part of the EII approved scheme. So there's a third one there. The next one is called startup capital incentive, in short SCI. In this scheme, you can have your family members investing in your startup. This is not for an employee, but for a person who wants to jump into startup space, want to have a startup and all. Or if you're a family member of a person who is doing a startup, the startup can raise a maximum of 500K from you, and whatever money you invest in that startup as part of this scheme, you get tax relief on that. So whatever money you want to invest, you can invest. That's about startup scheme. SCI scheme is basically for companies who want to raise equity financing, and the tax relief, whatever, is available only for family members of the existing shareholders. Let's say I invested in the firm, and my family members can invest in it, or that kind of networking. Next one is SURE. It's called Startup Relief for Entrepreneurs. Let's say you have been paying, the basic condition is that you have to pay for 4 years. And if you pay for 4 years, whatever tax you paid in those 4 years is given back to you to purchase shares in the company you're going to set up, right? This is to encourage entrepreneurs, as well as give them some initial fund so that they generate employment. For example, you have been a sole trader, you already have a firm, and you are employee of your own firm. In that case, it's not applicable, but you have been a proper payee for 4 years, then you get all the tax that you paid, so that you can put it into your new company. But in those 4 years, if you have used some money through a help to buy and all, you get little money. If you did not, you probably get 40 to 50K, even at 60K salary. So if you want to invest into become an entrepreneur, this is one of the best ways with little or low risk. If you fail, you can come back to pay within a year, and you still have good enough money to, use the cash for. The next thing is forestry. No one would have thought that forestry is a nice investment. The thing is, in forestry, you can invest till 125K without, you get tax relief till 125K. Let's say you put your salary 60K, you want to put 30K into forestry. So whatever 30K, which was supposed to be taxed at 40% to 20% based on the situation, that entire thing gets tax relieved, and you basically pay 20% of 30,000, right? So again, you need not buy forest scheme. You can invest into the funds that are available. You can look up on revenue, you'll get those funds. The minimum investment for this is supposed to be 750, but currently the average investment is around 3,500. Again, it depends upon business purpose. Whatever performance depends upon business performance. There may be taxes on the gains, but usually you can expect 7%. 7% is not bad, given that the deposits and savings account in Ireland has little as 0.2, 0.1%. The next one is the and post bonds and savings certificates. If you see on the table, the first savings bonds, the maximum length is 3 years, interest per year is 0.33%. So over life, you get 1%, not a great investment, but you don't pay any tax on that 1%. Whereas national solidarity bond, you get 2% over life, but again, 0.5% for 1 year. national solidary bond, the third one, 10 years, you get 1.5% per year, 16% over, let's say 1,000 euros this year. This year will be 1,160 in 10 years. Not a great amount, but if you're low risk person or if you're old and you want some money, some additional money, given that the inflation will be 1% or 2%, you can invest into that. Savings certificate is other one which you can invest into 5% over 5 years. Not a great return, but it will still beat or be close to inflation. Let's say you don't invest at all when the money is laying in your account. Whatever 1,000 euros you have today, maybe it becomes 900 euros in 5 years because of inflation, possibly. So you can look at these if you want riskless tax incentive investments. The last but not least is a rent a room scheme. Let's say you're short of money and you have a house and you have a room that can be used for renting. You can earn up to 14,000 euros per year just by renting your rooms, and you need not even be owner of this house. You can, if you took 2-bedroom apartment on rent, you can rent the other room. But again, you need to look at the subletting rules on the contract. If you are breaching the contract, the owner has every right to kick you out of the house. Yeah, these are the, I think, 8 or 9 tax efficient investments in Ireland. Hope you like this video. Do share with your friends. Again, if you need any tax filing services on Form 11, Form 12, you can write to me at allaboutireland247@gmail.com. If you have any career related queries, you can still write to us at connect@careerireland.com. Hope you like this video. Do share, subscribe, and yeah, motivate me to make more such videos. Thank you.